Okay, so a few days ago, I posted a trade on my Instagram and I showed the before and after of this trade and I banked $1,300. This was during NFP. So a few weeks ago, I dropped a free course on this channel, Market Trinity, and I've had a few DMs from a few people messaging me, asking me how they could take some of the principles and the key metrics I explained in that course and take it and use it in their trading. So that's why I wanted to do this video and this trade breakdown on gold. So what you're going to see is I used two of the key metrics that I explained in that video. One of them was volume profile, which I used on an intraday perspective to see where the buyers are getting trapped or where the sellers were getting trapped. Well, in this case, it was the buyers because I had a bearish directional bias. And I got that bearish directional bias by using the VWAP, which was the other key metric that I took from the Market Trinity course. And essentially what I did was I used the VWAP to get my overall directional bias of where the market was going. So this was gold, and you're going to see me go up to the higher time frame. But one thing I want you to pay attention to is it wasn't the time frame that was giving me my directional bias. It was the larger volume weighted average price, VWAP. So typically what I see is people tend to use the daily VWAP and they don't understand that you can also apply the monthly VWAP or even the quarterly VWAP, right? In some cases, I've seen people go as high as the yearly VWAP. So it wasn't necessarily the time frame. So even though you will see me go up to the 4 hourly, the reason why I did that was just to crunch down the data on the candlesticks so that I can have a much better view of the monthly VWAP. And I use the monthly VWAP to gain my directional bias. And then when I drop down to the 3-minute time frame intraday, I basically used the daily and the weekly to time my entry to make sure that I'm trading along with the overall order flow from an intraday perspective as well as a macro perspective, right? So let me not waste any time. Let's get straight into the charts and you're going to see how I did that here. Okay, so the first thing I do when I get to the chart is to determine the overall directional bias. And I do that by looking at value. Essentially, what I'm trying to look at is where do the market movers believe value is going? Is value shifting higher or is value shifting lower? Now, one way you can do that is by using the VWAP, which is the volume weighted average price. So right here, I'm just going to turn on the VWAP. We are on the 4 hourly time frame. So I've turned on the monthly VWAP, which is quite different from the daily VWAP, which a lot of people tend to only use. So a lot of people that I see using VWAP, what they tend to do is they use mainly just the daily VWAP. Whereas for me, I want to see what the higher time frame VWAP is doing because I don't want to be going against the overall market sentiment, right? The higher time frame. So one thing with VWAP is institutions and banks, they tend to use it as a point of adding to their positions or scaling in. So that's why, as you can see here, for example, in the month of June, we can see when price dropped below VWAP, we had this double top right here, right on the VWAP, and price traded down. And as you can see, price rejected this VWAP band. And if you've seen my Market Trinity course, which I posted on this channel, you know that when price starts rejecting the lower bands or the upper bands, it means the trend is very strong to the downside. So what I want you to do is ignore this current month's VWAP, which has only been for a few days. This is the month of July, and because it's only just started, we want to ignore this day. I only typically focus on the current month's VWAP if it's been longer than 2 weeks. And here it's only been 2 days, so there's no point, in my opinion, considering this as the monthly VWAP until we have more data. So usually at the start of a month, I just take into consideration the previous month's VWAP as my point of interest. Now, the day that I will be showing you is essentially this day right here, which was the 3rd of July, NFP. This was when NFP came out, or non-farm employment. I think the name's changed. So any which way you want to call it, it was NFP. High impact news was coming out on this day. And so ignore this candle. This was literally after my trade. But beforehand, when I did my analysis, this is what I saw. So as you can see, remember, we just went through the month of June and we can see that price was very bearish, right? So the market sentiment was to the downside. The value was shifting lower, as you can see right here, and we had a strong pullback. Now, what I did was I simply just marked up the previous month's VWAP, and you can see on the 3rd of July, when market opened, we had price come up to it and we had a rejection right here. So this was the first thing that got my interest. And this was where I started to think, you know what, we could potentially have a bearish day today. And that's when I dropped down to the lower time frame and I started to look for other confluences to in fact give me my overall hypothesis for the day. So let's drop down to the lower time frame and you can see how I started to add more information to this story and more data based on the intraday perspective to gain my overall confidence of where I wanted to trade for this day. So let's head down to the lower time frame. Okay, so now that we've determined what the higher time frame directional bias is, I need to make sure that the sentiment from the intraday time frame is in alignment with my higher time frame analysis. So first things first is when market open, we can see that bullish push to the upside, and you can see volume was very well above average. This was the buyer's attempt to take price above the previous month's VWAP, which is this blue line right here. But as soon as price got above, we see that volume started to dry up. So we see a divergence between volume and price, which essentially is just saying that buyers were no longer interested in pushing price higher and sellers were starting to take over this market. And as price dropped below the previous month's VWAP, we can see that sellers got very aggressive. Now look at this volume for this selling right here. It's literally off the charts. Like if I just adjust it, you can see this was very, very high volume. And this is what I refer to as climactic volume, or essentially in the VSA world, this is what's called climactic action. So this was selling climax, but we see price continue to push to the downside. So this was saying that sellers were very, very aggressive. And the other confluence that we can use to identify how aggressive sellers were is the VWAP. You can see this was the lower VWAP band and sellers were maintaining price very well below it. Now you can see that this green line coming across, essentially this was stacked buying. So aggressive buying from the previous day. And you can see that they tried to defend prices. This is why price went sideways and consolidated. They tried to defend prices. So they were most likely buying, trying to get in, but sellers were happy to take liquidities from the buyers. So this is another thing I talk about in the Market Trinity course. I talk about liquidity takers and liquidity givers, or liquidity drivers. And we can see here that sellers were driving the market. They were happy to take that liquidity from the previous day's aggressive buyers and continued to push price back down. Now here we do see a mini double bottom. Buyers successfully take price back above the lower VWAP band, which signaled a trend shift, right? A trend pulse shift. And you can see when sellers tried to take price back below the lower band, they failed and price continued to trade back up. So price hit VWAP. Eventually, buyers successfully took price back above VWAP. Now, check this out. So ignore these parts I've already marked up. I did that just so that I can remember the points I want to make during this breakdown. So I'll just take that off, but I will put it back on because it is significant for this trade. So first thing you can see is after breaking above the VWAP, buyers aggressively pushed price back up. And there are two ways we can determine how aggressive they were. The first thing we can see is the stacked buy imbalance. This essentially is more buy orders than sell orders. If I zoom in, you can see this right here. So So you can see it right here. They were way more aggressive buying than selling. And that's why we got the stacked imbalance. Again, this is another metric I discuss in the Market Trinity course on this channel. So do check it out. But essentially, this was buy imbalance, very aggressive buyers coming in. And the other way we can determine how aggressive they were is by looking at the volume right here. So you can see volume was very well above average. Now, this volume indicator is something that I've basically put together myself. So I've basically just created an average volume line going across, and it lets me know when the volume is way above relative average. So if you want to get your hands on this indicator, drop a comment in the comment box and I'll send you this. As a matter of fact, I'll send you the overall template that I'm currently using. So you get access to the VWAP and as well the volume panel right here, which essentially shows you when volume is above average or when volume is below average. So going back to the charts, going back to this analysis, we can see buyers got very aggressive. We see the stacked imbalance. We see volume very well above average. And you can see they successfully pushed price back up to the previous month's VWAP. But then remember, we've got selling climax. So we've got these aggressive sellers. They weren't willing to let price go back above the previous month's VWAP. And we can see sellers stepped right back in and pushed price back down. Now, before we go any further, we need to mark up the value area for these aggressive, because this was very, very aggressive buying that we saw here. I mean, look at it. So this was 1, 2, 3, 4, 5, 6, 7, 8. Out of the 8 candles, 7 candles had above average volume. Even here, when sellers try to step in, we can see they absolutely got obliterated and absorbed, and buyers kept pushing price higher. So we can't ignore this volume cluster. So whenever you see volume cluster like this, this is essentially showing very, very aggressive buying or very aggressive selling. So what I do in this case is I just mark up the 8 candles that had very high above volume, because these were 8 consecutive candles. And what we can see right here is that, as you can see, when sellers step back in right at the high, they couldn't break below the value area low of these aggressive buyers. So aggressive buyers step back in and they try to push one more time, but then eventually sellers did successfully break back below that whole value. So that value area is essentially where the most buying took place. Out of all this buying cluster that we saw here, the most buying took place right around this area. And you can see sellers eventually successfully broke below that value area low. Now, this was our first clue that sellers were defending prices, and also they were shifting value lower, because you can see they broke back below the upper standard deviation band for the VWAP, right? So you can see they pushed price down below the value area low as well as below the selling climax low. This is very aggressive action from the sellers. They were willing to step back in and defend this area. So once we got that broke below, showing us that there was a shift in the trend, in market sentiment, we see that prior to London Open, we get some more push to the upside, right? This time around, look where price rejects from. It rejects from the value area high of these aggressive buyers. It also rejects from the selling climax high, right? So this was the selling climax candle. That was the high of that candle. It rejected from that high and price began to drop. Now, at this point, I'm looking at this and I'm thinking to myself, okay, so I'm expecting the market to be bearish because bears are defending their position. But at the same time, this price action took place before London session, right? So now I want to see if the buyers during the London session have enough strength or enough appetite to push price back above. Now, check this out. Look what happens. Price, when sellers came during the London Open and price shifted down, look what happened. This aggressive buyers, they defended their position. So imagine when this candle opened, it pushed down, but look, all of that selling was absorbed by the stacked imbalance. So
at this point, I'm like, okay, so these buyers are still getting aggressive. So they got aggressive, took price, attempted to push price back up, but now look where price rejects. It rejects from the volume point of control of these aggressive buyers, right? So you can see price came up. This time around, it rejected from here. So the first time, they successfully pushed it back up to the value area high and sellers stepped in. This time around, they successfully pushed it to the volume point of control and they got sellers step back in. So now you're starting to see the change in sentiment of gold here, right? Sellers are getting aggressive. And now this time around, they couldn't even push above the upper standard deviation band. So here, they successfully pushed it above, but at this point, they couldn't push it above the standard deviation band. And what did we see? We saw that price began to drop and it dropped below VWAP. At this point, this is where I was like, okay, buyers are officially losing strength. But I still wasn't interested because this drop below VWAP wasn't significant enough for me. I wanted to see more aggressive push from the buyers. I wanted to see more push. Something showing me that, you know what, these sellers are very aggressive. So I still sat on my hands and I waited to see what was going to happen. Now, before we go any further, remember when buyers stepped in here, you can see the volume as well above average volume. So these two bars gave me a cluster where I can now draw my volume profile. So I'll just draw that up here for these two candles. Like so. So now check this out. So when price came back up this time around, so I'll just remove this one for now and I'll put it back later on. So when price came back up, when buyers decided to step in after price got to the VWAP, guess where they took price up to now? This time around, it was rejecting the volume point of control of these aggressive buyers that stepped in, as well as the value area high. So you can see if I hold my cursor right here, you can see with the line going across, it rejected the value area high of these aggressive buyers, rejected the volume point of control of these aggressive buyers. It also rejected the lower line. So the low of the selling climax low, right? It also rejected that point. And this time around, it rejected these aggressive buyers. It rejected the value area low. So this is how you read order flow using volume, right? Think about it. There is nothing subjective here. Everything I'm doing is objective. I'm using volume and I'm gaining more data. I'm understanding the language and the story that order flow is telling me, right? None of this is subjective. I'm watching this and I'm saying buyers are not able to push price any further up because they keep getting trapped every single time. And we've already seen the highest volume for the day was selling, right? Look at the selling climax candle. As we said, it was off the charts and nothing came close to it until the news dropped. So at this point, I'm like, okay, so buyers got rejected one more time again. And you can see right here, right? We can see the volume cluster, the same thing that's happened several times happen again here, this time at our level of interest. So it was at this point that I started to think to myself, if sellers successfully push price now below VWAP, I want to be getting involved the next time I see a retracement. So I just drew this one right here because you can see we had above average volume. So this time around, you can see sellers stepped in and pushed aggressively to the downside. Now, a lot of you ICT traders will look at this and see that this is a fair value gap. And yes, it is a fair value gap, but let me show you something even deeper. Let's go deeper into the candle and use order flow, right? When we go deeper into the candle, look at this. You can see there were no buying interest and it was all selling. So this is why it's highlighted red, because this is imbalance, right? This is selling, this is more selling orders than buying orders. And that's why you've got in the gap. That's why you get the massive fair value gap that a lot of people trade without having a deeper understanding of volume, right? So here you can see this created a gap after buyers got trapped. So when you add all of that to the overall context of what we've been doing from the higher time frame all the way back down here, you can see that this market was very bearish. Now, when we push forward, you can see, again, we break below VWAP. But check it out. Every time buyers got trapped, right, we got a new low. This time around, we got a new low. And this was the significant push below VWAP that I was waiting for. So as you can see, price pushed drastically. This time around, it got all the way to the lower band. This is when I first posted on my Instagram story that the market for gold is very, very bearish. There was no denying that this market was bearish. This was not me being subjective. This was the market. This was order flow telling me what was going to happen, right? So it was at this point I said, if price returns back to VWAP this time around, I want to be bearish. So we had a fair value gap. Within that fair value gap, we had a stacked imbalance showing very aggressive sellers, right? And then think about it, these trap buyers, look at where the volume point of control was. Because remember, every time we rejected the point of control right here, then we rejected this point of control right here. And this time around, we had a point of control in alignment with this fair value gap, with stacked imbalance within the fair value gap. What do you think price is highly likely to do when it returns? Sell off, right? So that's exactly what happened. So I just waited for price to come back up to this level, right? And we can see the rejection. But before we go even further, let's add another confluence. If I pull up the weekly VWAP, so look at that. So this is the weekly VWAP, and you can see the line going across, right? This was the upper VWAP standard deviation band. So we had successfully broken below the upper VWAP standard deviation band for the week, and price came back up to a level where we saw trap buyers, we saw the point of control coming across, we saw stacked sell imbalance inside the fair value gap. At this point, it's a no-brainer for me. So then my entry was literally when price broke back down below VWAP, because I'm expecting now that every time price rejected from the trap buyers, it always made a new low. So I got in here expecting that price would break below this low. And my stop loss essentially was just right above this swing high right here. So what happened? So you can see price continued to trade down. And when it got to this level, this was when I posted my trade. So I was up about $800, but I held on to my trade because I knew sellers will continue to defend this market because it was very bearish. So look what happened. So I was up about $800 here. And then when price came, price rejected the VWAP this time around. This was several minutes before NFP, before the release of the news, right? This time around, price couldn't even get back above VWAP. So let's go back. When you look here, you can see when buyers dropped down below, when sellers took price below VWAP, buyers stepped back in. They couldn't reach the upper deviation band, but it got back up significantly. Then when sellers stepped back in, right? Look, this time around, buyers could barely get far above the VWAP. So this time around, look what happened. They couldn't even get past above the daily VWAP. And what did we see when the news came out? A massive sell-off. Massive sell-off. And essentially, that's how I used VWAP, volume, and value to trade gold, right? So you've seen it all. You've seen it on my Instagram stories. If you do follow me on Instagram, you saw when I posted everything. I posted the before, posted the after. It was all of my stories live. And that essentially is how I used VWAP value to trade gold during NFP. And I banked about $1,300.
Right. So you've seen it. You've seen how I analyzed the charts using two of the key metrics that I explained in my Market Trinity course. If you haven't watched it, make sure you go and check it out. The link will be in the description of this video. But essentially, one thing I wanted to point out is I'm not going to be one of these people that tell you, oh, this strategy or that strategy is the only strategy that works. Every strategy works, right? What you need to do, however, to level up your game and level up your edge is to apply order flow analysis using volume, using volatility, using value. These are the Market Trinity I talked about, right? These things is what amplifies your edge, irrespective of what strategy that you're using. And you've seen me take only 2 of the key metrics from the Market Trinity course, from the 7 key metrics I explained, and how I traded NFP with confidence, right? So once again, I did post it before and I posted it after on my Instagram as this trade was playing out. And I also held my trade even before the news was coming out. I was already up $800, but I still held because of how confident I was due to the overall order flow. This was an objective analysis. There was nothing subjective about it. I used order flow to let me know where the overall sentiment of the market was, and it was bearish. So you've seen me execute that. If you have any questions, if you do want to see me do more trade breakdowns in the future, comment below. Let me know what it is you'd like me to elaborate on. And also, don't forget, hit that like button, hit that subscribe button, and I'll be sure to see you in the next video. Peace.